Welcome back to Digital Money Mastery. I'm Michael Jones, and it has been a wild week in the world of crypto. The altcoin market is reeling from a significant crash as Bitcoin plummeted below $85,000 with billions in liquidations. We're talking macro jitters, major regulatory moves, an Invesco Solana ETF launch, and what this all means for your portfolio as we head into 2026. This is your essential weekly update. Let's dive in. The big story this week is the broad market downturn. The global crypto market cap fell by over 2.7% to below $3 trillion, with most major altcoins underperforming Bitcoin. Bitcoin itself dropped to around $86,000, pressured by year-end profit-taking and fears surrounding a potential Bank of Japan interest rate hike, a move that has historically led to significant crypto dumps. The current risk-off sentiment has been linked to jitters in the AI stock bubble, which has seen trillions in value erased, spilling over into correlated assets like crypto. We're also seeing low liquidity, which is amplifying these price moves. Analysts suggest we may see continued pressure into early 2026. Here's a quick look at the current market movers. Ethereum, ETH, trading around 2,929.64, down about 7% in 24 hours. Solana, SOL, priced at approximately 126.17, also seeing a decline. XRP, hovering near 1.769 despite significant ETF inflows. Despite the gloomy price action, there have been significant developments for specific altcoins. Solana ETF launch. Invesco and Galaxy Digital officially launched their Invesco Galaxy Solana ETF, QSOL, on the CBOE exchange this week. This is a major step for institutional adoption of altcoins. Interestingly, Solana also reported a DDoS attack this past week, but the network was unaffected. XRP inflows. XRP spot ETFs have absorbed nearly $1 billion in inflows over the past 18 days, extending their streak and showing strong institutional interest, which some analysts believe is helping to stabilize its price near $2 despite sell pressure. Coinbase expansions. Coinbase introduced 11 new altcoins to its perpetual-style derivatives offering, including Avalanche, AVAX, Cardano, ADA, Dogecoin, Doge, and Litecoin, LTC. Ethereum fundamentals. Insiders warn Ethereum is fighting for survival against high-velocity competitors like Solana. However, BlackRock's move into Ethereum staking and JP Morgan's launch of a tokenized money market fund on the Ethereum blockchain signals strong institutional confidence in its long-term potential. We turn now to price predictions and technical analysis. The current consensus is cautious, bearish outlook. Many major coins like Stellar, Ondo, Sui, and Litecoin have a bearish outlook, with prices targeting previous lows. Market sentiment is deep in the fear zone. Support levels. For Bitcoin, the next significant support is around the 81K to 83K range. A break below could see it hit the golden support of 60-70K. For Ethereum, prices dipped below $3,000 and are fighting to hold key support levels. Potential bounce. Some technical indicators like the Relative Strength Index, RSI, suggest some altcoins are in oversold territory, meaning they might be ready for a short-term bounce, but overall momentum remains weak. We have a tough road ahead into the new year, but the long-term potential remains strong as institutions continue to build in the space. The regulatory environment is also a major theme. The UK's FCA has opened a consultation on proposed crypto regulations covering staking, lending, and market manipulation. In the US, Congress is pressuring the SEC to allow cryptocurrencies in 401k plans, a move that could open the floodgates for retail investment. Looking ahead, this week is all about macro data. The US non-farm payrolls and consumer price index, CPI, reports are due. These figures will heavily influence the Federal Reserve's future interest rate decisions, which in turn will impact market liquidity and risk appetite. Keep an eye on those announcements. To wrap up, the market is currently navigating choppy waters driven by macro pressures and low liquidity. While prices are down, institutional activity remains a strong long-term positive indicator. Remember to do your own research, stay safe out there in this volatile market, and exercise caution with those wallet signature requests during these times. You can find more detailed information and technical analysis on our website and on sources like Binance Square and Crypto Slate. I'm Michael Jones, and this is Digital Money Mastery. Stay informed, stay strong, and I'll see you next week.